Hey guys, Eric here, Mr. Fired Up Wealth. And this morning, I bought $20,000 in a new stock. It's not a stock that I haven't believed in for a long time. In fact, I've owned it many times, but I've always sold it as it's gone higher. And before I get into what I bought, I will say that this is a risky video for me to make. It's a risky proposition in general because generally speaking, these type of stocks I typically try to avoid, and the value side of me kind of tells me that I'm doing the wrong thing. But I've spent a lot of research on this. I've spent a lot of time on it. And this one reminds me a lot of when I believed in Amazon, years ago, when nobody believed in Amazon before it really blew up. And I think we're in the same position here. There's a chance that the company doesn't get to there, doesn't succeed, but there's a very strong chance, and they've got a very strong moat. This company has questionable is not a good word. It has controversial leadership. I admire the man very much, but he does things that sometimes aren't the smartest as a CEO. And that's part of the reason why people like him. He's kind of a maverick. It's interesting because when you look at like Oracle had Larry Ellison was the CEO for a long time. He's actually on the board of directors for the company I bought today. You're probably figuring this out. But Larry Ellison, he was always kind of a bad boy, a maverick. And because of that, a lot of people didn't like to invest because they were turned off by him. But this other CEO, for whatever reason, it's embraced. And I think a lot of it has to do with the generation. So when you think of people that are my age or probably a little younger than me, they really admire these types of personalities. And so, of course, I'm talking about Elon Musk. I'm talking about Tesla. And I just can't ignore it here. I bought it this morning at about $1,420. I think I'm up on it almost 8% today already. So I've done well. At least short term, we'll see what happens. It'll probably drop 20% tomorrow and you'll laugh at me. But I'm not buying it as a short term hold. I'm buying it as a long term hold. And I do want to note that I've left room. So even though I bought over $20,000 in this stock, I do have room. I would go up to, maybe even $50,000 with this company because I think it is positioned that well. Some of the price targets are all across the board from 300 a share to 15,000, everything in between. I really do like the ARK ETFs, and the $5,000 target seems realistic. When you look at the momentum they have, when you look at some of the laws that have been changed. So if you're not familiar, there's some laws that go into effect in the next couple of years in California that I think is going to make a big impact on the business. There are some pros and cons of the business, and I'm going to walk you through both the pros and cons of Tesla. So you already know the company, but if you're an investor or a potential investor, I encourage you to watch the rest of this video to get insight into why someone like me would buy this at a decent sized position to hold for a 5 to 10 year long-term hold. Stay tuned. Okay, guys, so if you haven't seen this, this is the Q2 2020 update. So it's right after the earnings that just kind of recently happened here. So here are some of the highlights. And this is really important as an investor, for me at least, to kind of understand where these guys are at. I feel like they're at a point where they've proven themselves. A lot of people have been invested in this company since $200-300, and good job to you. You were right. I mean, congratulations. You are absolutely spot on. And it's one of these stocks where you'd say, why would Eric buy this at this price? Now, again, I want to reiterate, I've bought this stock many times and I've traded it and I've made good profits on it, but I didn't buy it at $300 and just hold on to it. I bought it at 200. I sold it at 500. I bought it, here, I bought it there. I sold it. I'd sell it every time I made a couple $100s a share on it. And I've made thousands and thousands of dollars in the stock. I always looked at it as a trading stock. What I'm telling you today is I think it's more than that. And I'm going to show you a few different things here. So cash. Now, this is still a crazy valuation when you look at just a standard way to evaluate a company. So if you're trying to put a value on this company and you're going to use traditional methods, it's pretty much not possible. So someone who's really a fundamental type investor, they're going to tell you this is overpriced and they're not going to buy it. And maybe they're right. They could be right, because we look at the technicals on this. This easily could go back below $1,000. But hear me out. So $535 million increase in our cash and cash equivalents in Q2 to $8.6 billion. Operating cash flow less CapEx, so free cash flow of $418 million in Q2. So still not justifying the value by any means. Our business has shown strong resilience during these unprecedented times. Despite the closure of our main factory in Fremont, California for nearly half the quarter, we posted our fourth sequential GAAP profit in Q 2020 while generating positive free cash flow of $418 million. Profitability, $327 million operating income, 5.4% operating margin in Q2. And they now have 4 quarters of sequential profitability. You can read the rest of this on your own, but next U.S. Gigafactory site selected, preparations underway, increased Model S range to 402 miles EPA. Model Y and China-made Model 3 production rates continue to increase. Now, there's a lot of great information on this document, so I'm going to go ahead and put a link in the description below the video. Take your time and look through that on your own. I'm not going to read all this. I'm going to go through some of the highlights, but I wanted to show you this really quick. So in Fremont, California, they have the Model S and the Model X. They have 90,000 in production currently. They've got the Model 3 and the Model Y at 400,000. Shanghai, they've got 200,000. But look at all these empty slots here. So Berlin, they got a gigafactory for Model Y, Model 3. They've got a new U.S. factory for the Model Y and the Cybertruck, and then another U.S. for the Tesla Semi, which I'm going to get to in a second, which is really cool, and the Roadster. So I'm going to show you some pictures of what these factories look like. It says, although the Model Y production line was operating for about 4 months in the first half of 2020 due to shutdowns from COVID, we're excited with the Model Y production running at installed capacity. This ramp was significantly faster than our initial Model 3 ramp, which took over 9 months. We're installing additional machinery at the Fremont, California factory, which is expected to increase the Model 3 and Model Y capacity from 400,000 to 500,000 units. So we're going to get another 100,000 units out of California. In Shanghai, the Model 3 has received strong reception in China, not only becoming the best-selling EV, but also competing with the mid-size premium sedans such as BMW. And BMW is coming at these guys hard. There was just a few articles in the last couple of days about BMW and how they're trying to compete. This is not surprising given Model 3's lower price point, even before subsidies and vehicle tax. Now, that's a risk because some of those subsidies and taxes are going away. I could spend hours talking about Tesla and all the pros and cons here, guys. Reduced operating costs and industry-leading standard equipment. Construction for Model Y lines in Shanghai factory is progressing as planned, with the first deliveries expected in 2021. And you'll see in a minute here the pictures, how far they've really come along. In Germany, one of our biggest European markets, the Gigafactory Berlin construction continues to progress. As we build new factories, we continue to iterate on the factory and product design to improve efficiency, cost, and technology. We are implementing further structural improvements based on our learnings from prior factories. So let's just look at this. So core technology talks about autopilot and self-driving, the vehicle software, the battery and powertrain. Now they do have quite a few advantages when it comes to battery and powertrain. And I mentioned earlier, they now have a 402-mile range on their batteries, but they do have some very strategic advantages when it comes to the battery technology. There's also the energy business, which I think has some potential, and then solar, which a lot of the analysts don't even give the solar. They actually give $0 to the share price. So, I mean, there's upside there, I think, as well when you look at it. But I'm not focusing too much on that right now. Wanted to cover these photos. This is really cool. So this is the Gigafactory in Shanghai. So in the foreground here, you see the Model Y factory, and then you can see the Model 3 factory in the background. You can see just how massive this thing is, guys, and you can see it's coming along quite nicely. So they predict that they'll have this thing up and running by late this year, early next year, and actually be producing cars in 2021. And then you've got here's the interior of the factory in Shanghai. So you can see some of the machinery that they use. Here's a person down here for scale. It's a pretty massive piece of equipment there. There's some more internal pictures, all the robotics that are going to be putting these cars together. Some more robotics pictures. And then here's the Gigafactory Berlin. This is the Model Y factory construction. You can see they're not nearly as far along there. They had to clear out all these trees. You can see all the trees that they had to clear out. It's like a perfect kind of square cut where the trees were cut out there. So That's an interesting and a whole nother story there. But here's the Model Y factory rendering. So you can see kind of the before and then what it should look like after. It's pretty massive, nice looking, pretty cool stuff. So there's a bunch of great information on here. There's the financial statements. Obviously, this stuff is really important. When it comes to Tesla, again, it's hard to put an actual value on it by looking at traditional measures and metrics. And so a lot of this is speculation. So I will say that I am investing in this as a spec. I'm also going to tell you that I have a lot of room. So if I want to add more, I'm going to add more to it. So if this drops, I'm going to double down. If it doesn't, then I'm just going to roll with what I've got invested. Okay, so I'm going to get into some really cool information here in a second, but I want to show you this. This is really cool too, but stay tuned because I'm going to show you actually what makeup the QQQ is, like what percentage of Tesla is actually in the triple Q's ETF of the NASDAQ 100. You might be surprised how much they've grown into that. And the thing that's coming on the horizon is they're going to be put into the S&P 500. And we'll talk about that in a second. So I wanted to show you this really quick. So you can see there's Model S, Model 3, Model X, all the different products they have in cars. The one that's really interesting to me is this semi. So you know, there's been a lot of hype about hydrogen and things like that. You know, if you look at this, okay, so this says 0 to 60. I'm going to try to zoom in here. 0 to 60 in 20 seconds. Speed above 5% grade, 60 mile an hour. Mile range, 300 to 500 miles. It says fuel savings at 200,000 plus. Expected base price of 150,000, and expected founder's series price of 200,000. Base reservation 20 grand. I want to show you this though. This is the cockpit, right? Safest truck ever. Enhanced autopilot helps avoid collisions. A centered driver position provides maximum visibility and control, and a lower center of gravity offers rollover protection. Every driver is responsible for remaining alert and active when using autopilot and must be prepared to take action at any time. Look at how cool that is, guys. The entire cockpit. So if you ever seen a semi, you know, usually there's a passenger seat and everything. It's one long kind of row seat, really uncomfortable. This is literally a cockpit, and it makes a lot of sense because you can see, you know, basically a much wider perspective of view when you're driving, which makes it a lot safer. So you've got the two different dashboards on each side. You can see out the front window on both sides all the way around. I think it makes a lot of sense. You know, and my grandpa actually had a trucking company growing up, and I can tell you there's a lot of, you know, dangers. I've been in a lot of different semis. This design to me makes a lot of sense. Obviously, you know, they're not in production yet. They're being built, but you know, if they can execute on this plan, it looks very, very good to me. And I wanted just to show you these last couple pictures, and I'm gonna move on to another topic. But I mean, that thing looks sweet. You can see Musk there kind of showing it off. There's a little video you can watch on the website, but really, really slick looking semi. I mean, there's a lot of potential here with this one. So real quick, I wanted to show you the QQQ breakdown. And now this is one of the deciding factors for me because I've already got so much money into QQQ between my taxable account and my different retirement accounts. I'll just say I've got a lot of money in the triple Qs, and I have for a long time. Apple is, you know, 11.86%, Microsoft's 11.2%, Amazon 11%, Facebook 4%, and they got Alphabet at 3.83%. And then, well, there's Google, there's GOOGL, which is Class A shares, Alphabet, and then there's Class C shares. And that makes up, you know, 3.83 and 3.75 respectively. And then ahead of NVIDIA, you have Tesla at 2.47%. So if you own triple Qs, if you own QQQ ETF, 2.47%, almost 2.5% of that is now Tesla. And I don't think a lot of people realize that, so I wanted to bring it to your attention. The last thing I want to cover really quick, guys, this is an article from Seeking Alpha. It's from July 26, Mango Tree Analysis. I thought it was a good article. It talks about basically how, you know, Tesla sell the news. The thing ran up hard and fast and basically, you know, had a great quarter, blowout quarter, but everybody sold the news. And, you know, basically this person's price target is 1750. I think 1750 is not going to be hard to get to. I think we're going to get there pretty quickly. I'm looking at 1800 even in the short term over the next couple of months as a potential. You know, with that said, it could easily drop again, you know, to $1,000. It could go below $1,000. The pivot point's around $1,250. So as long as you stay above that $1,250 mark, there's quite a bit of upside. I see it going to probably $1,800 plus. Again, I got into it around $1,400, and I bought, 15 shares for $21,300. Now, the last thing I want to point out today, I could talk for 2 hours about this, but I know that, this video, I want to make this video concise and relevant so you can get as much information as quickly as possible. But this is the last kind of selling point for me, was the S&P 500 inclusion. Because what happened now, okay, so while S&P 500 index inclusion is not direct fundamental catalyst right now, it could be a catalyst for the stock in the short term and for the fundamentals of the business in the long term. What do I mean by this? Well, considering Tesla reported GAAP profit of 50 cents a share in Q2, the company has now become eligible for the S&P 500 index inclusion. You just saw that it's part of NASDAQ 100. Now it's probably going to go into the S&P 500. And this inclusion will increase institutional ownership of the stock. When the company is plugged into the S&P 500, index funds and mutual funds will be forced to enter a position in Tesla. A lot of these funds are buy and hold investors, not traders. Thus, a large portion of Tesla's float will be bought by massive institutional holders. Because these managers hardly alter their positions, a large portion of the float, a large position of the float will not be traded as frequently. So now you're going to have a lower float, less shares that are going to be basically traded and floated around on a daily basis, which in theory could make the stock price go up not only in the short term, but also in the long term. All right, guys, so that was just a quick video on Tesla and why I bought 15 shares today for over $21,000. Again, this is a very risky video for me to make because if it, drops, you're going to never hear the end of it. I'm taking a little bit of a risk here, but I like my chances. Regardless, I like this long term. So even if I'm wrong in the short term, I'm going to double down. I plan on holding this for at least a couple of years, probably more like a 5-year plan. Again, the pivot point is really around 1225, maybe call it 1250. As long as we can stay above that support line, I see an uptrend, at least in the short term, to about $1,800. Of course, any crazy news that is out there could impact it. There's a lot of risk with China. So, with NEO involved as well, and China could, who knows? They could come out with some crazy, law or something to block Tesla in China to support NEO. That could happen. So, if something like that happens, that's going to change the story. There's a lot of risk with this one. There's a lot of reward with this one. It's one that is not for the faint of heart. I know I'm going to get people on the channel that are surprised that I'm buying at this range. There's a reason for it. It's calculated. I'm putting it in my spec bucket for now. So I'm not saying that this is a slam dunk or a home run. I'm not saying I could be wrong, but I feel like my chances are really good that this is going to be a good long-term hold. I see the stock being worth a lot more. I see them being a moat. I see a fanatic base. That article I was reading earlier compared it to a combination of Amazon and Apple, and I agree with that. And I said in the beginning of the video, it reminds me a lot of Amazon before Amazon really blew up and became what Amazon is today. And so what he means by that is you've got kind of the moat of an Amazon and the massive infrastructure and scale, and then you have the fanatic base, the fan base of, say, an Apple consumer, because Apple will pay more for an iPhone, they'll pay more for an iMac. They love the technology, they love the company, they love the brand, and Tesla's the same way. There's going to be competition. In fact, everybody's coming after them with their own EV, models, and that's going to happen. But they've got some strategic advantages. They've got a loyal fan base. I see it being very hard for these guys to fail. Could they fail? Yes. I just see statistically, if I look at it as a moat and something that I want to be involved in long term, I feel like my chances, in my opinion, are very high with the stock. So thanks for watching. If you haven't subscribed, please do click the subscribe button, the little icon that allows notifications. If you haven't checked out our Facebook group, go on Facebook, search for Fired Up Wealth, apply for that group. Appreciate your time and attention. Have a great rest of your day. Take care.